start by introducing our guests that should join us today in alphabetic order. With us today will be from London, Cass Business School, Professor Thorsten Beck, then from Copenhagen, Denmark, from the Copenhagen School of Business, Professor Svend Hougaard Jensen, and then with me here will be Professor Sebastian Płóciennik from PISM Institute and from the Vistula University, and Maciej Witucki from the Polish Confederation of Entrepreneurs Lewiatan. Okay, Thorsten, can you hear us?
Yes, I can hear you.
Great.
Can you even see me? Oh, yes, you can.
Yes, I can.
I can see you.
Okay, great. Sven is
Okay.
there, Thorsten is there.
Can you see me?
Yes, thank you for joining us. Thank you for joining us.
Pleasure. Thorsten, can you see me as well?
Yes, I can indeed.
Okay.
Let me just see. No,
but I can't see Adam.
That's correct. You cannot see me. If you would like to see me, you can watch it on Twitch. So we do not have our cameras for you because we are using it to live stream. That's why you cannot see us, but I hope you can hear us. Okay, great.
I can definitely hear you.
Okay, give me 1 second. I just want to upload my presentation. I hope I'm doing this the right way now. Give me 1 second, please.
Okay. For those
Yes,
of you who are watching, Thorsten will be sharing his presentation. Thorsten will start his presentation with a short presentation. Because I would like everyone here who is present to give us some introduction on the current state of opt-out countries regarding being within the euro area or joining some euro area institutions. So Thorsten, the floor is yours. Please start with your presentation. Please keep it brief.
Yes, I will indeed. Okay, so maybe as a background, and I think somebody from Denmark will also talk later. I've kind of participated in the discussions both in Denmark and in Sweden, a little bit more intensively in Sweden than in Denmark, on their possible participation in the banking union. Now, the situation in Denmark and Sweden is of course special, since both of them have no plans to join the banking union. Sorry, the Eurozone. It would be just a non-Euro members of the banking union. However, I will try to make my presentation relatively general, not just related to Denmark or Sweden. Maybe as one point right away, I mean, the background of why we are talking about the banking union as such and a possible participation is, of course, the realization after the global financial crisis that in a world with cross-border banking and other cross-border linkages of financial markets, cooperation between countries is really necessary, and especially focusing on the resolution phase or the crisis phase. Before the crisis, we had cooperation, but it was mostly what I call a sunny day cooperation. So, if we then go more specifically from the global financial crisis to the Eurozone crisis, we kind of realized that a currency union as such does not really work without a banking, without a joint financial safety net. Because national supervisors are often too close to supervised banks. They like to focus on national champions. There might be regulatory capture. Of course, we've seen this across the Eurozone, across the European Union. We've seen it in Spain, we've seen it in Italy, we still see it in Germany. I mean, if you think about the recent merger talks between Commerzbank and Deutsche Bank, which were purely politically motivated. Second, and I'm going to come back to this unfortunately, and because we're going to see it coming up again, close link between banks and government solvency, where kind of a vicious cycle, banks get into trouble, the government might have to bail them out, but then at the same time, government solvency comes under pressure, the banks hold these same government bonds, come into further pressure and so on. And there are several discussions on how to go around this, regulatory limits, but also maybe the creation of a safe asset. Yeah, the spillover effects, And then maybe also on the positive side, for a currency union to really work, we need a efficient financial system that can reallocate resources across different countries of this currency union. So a bit, if you think about the US being a currency union, that's what's happening in the US. I mean, it's of course also behind the capital market union initiative that's currently ongoing. Maybe beyond that, so this is most, except for the first argument, all of these arguments really speak to the Eurozone. And that's also why the initial initiative of the banking union was really limited to Eurozone members. There are, of course, broader arguments, such as the first one, the difference between a national and a supranational supervisor. And of course, also the general idea of having a more competitive, more efficient banking system in a broader sense, that one can also think of broadening this argument beyond the Eurozone to other EU member countries. So I'm not going to go through the details here, but what we've had so far is a SSM that in Frankfurt, a single supervisory mechanism directly supervising large banks, indirectly being responsible for the less significant institutions. We have a single resolution mechanism, which is still a little bit more in the build-up phase. Of course, also reflecting that on the national level, resolution schemes, frameworks are relatively new. There is, of course, a link between the SSM and SRM, where it seems that the SSM is more in the driver's seat than the SRM. But of course, also, and I think this came already up in the previous panel, is we have a couple of missing items. We do not have a European Deposit Insurance Fund. We've seen that, for example, that led to problems in Cyprus. Mainly, we don't have it for political reasons. And the backstop funding, which of course would be especially important in a systemic banking crisis, is not really completely clarified yet. There has been progress made with a joint single resolution fund and a credit line from the ESM, but of course that's not a backstop per se. So let me then directly talk about these pros and cons. And again, I'm kind of throwing together, on the one hand, countries like Denmark and Sweden, who would only join the banking union but not the Eurozone, and then countries in Central Europe that for whom the entering the banking union would be like the first step of entering into the Eurozone. Now, on the pro side, on the positive side, definitely having a seat at the table can be very helpful. Being included in the cooperation agreements and these joint supervisory tools, especially for large institutions, for systemically important financial institutions, can be also very beneficial for supervisory culture in the country that joins. On the other side, or looking just the other side of the coin, is you would avoid certain divergence in supervisory practices, and you would benefit from being part of the single market in banking as it is being kind of re-established. We are not in practice yet, but at least in regulatory terms. But there's still some independence left, and we see it actually right now with the countercyclical capital buffers being reduced by countries and not by the SSM itself. However, there are also some downsides very clearly, and one of them, of course, is the loss of regulatory and supervisory independence. Yes, you are part of the joint supervisory teams, but for example, you're no longer a part of supervisory colleges. You're not as a regulator represented anymore in these colleges. It might increase a trend towards branchification, which of course, again, implies a certain loss, a certain supervisory independence. Yes, you do have a seat at the table, but most of these countries are relatively small, maybe Poland being actually the exception. But other countries would not be as powerful, let's say, Germany, France, or Italy. And then there's one governance issue that even though a non-Euro banking union member would be part of the supervisory council, would not be part of the ECB governing council, which actually can overvote or outvote or veto decisions by the supervisory council. And that seems to be a little bit of a governance issue. It might not be that relevant, maybe just in tail event or extreme situations, but it's still an issue. So, open questions. This is actually, I think this is almost my last slide actually, effectively. Open question, as I just mentioned, the banking union is incomplete. there is the issue, of course, of the legacy losses, including in Italy, and how they're being addressed. There is the issue of the deposit insurance. There is the issue of the backstop. There is, in addition, of course, the issue of access to liquidity from the ECB, which, of course, is a Euro institution, not a EU institution, and of course acts in euros and not in zloty and or in krona. Here, of course, then there's a big difference between the permanent opt-outs, Denmark and Sweden, versus other countries for whom the banking union is simply a first step towards entering the euro. So here the situation would be very different. Now, coming back to the current events, of course, I mean, we're looking, depending on how the crisis and the recession will play out, we are looking at quite some troubles ahead for European banking systems, or not just Euro, but the European banking systems in general. There is, of course, what I call the Italian question, the sustainability of the sovereign debt in Italy. And the question, of course, is what if things really come to a tail event? Will there be just more ad hoc solutions, kind of opposite to what Madame Lagarde yesterday did and what in line with what Philip Lane did today, kind of more whatever it takes? Or will there really be a big and final reform? And so that's why also for Denmark and Sweden, my recommendation at the end was, well, at the current state, you might want to hold out a little bit and see how this the regulatory reform process in the banking union works out. And maybe at the end of this process, join rather than in the middle of it, where you don't know what the ultimate outcome ultimately will be. So let me stop here. Happy to take questions. I have to leave in a couple of minutes, I'm afraid, but yeah, so that's what I had to say. Thank you very much.
Okay, thank you, Thorsten, for your interesting presentation. As you have to leave, I will give you two follow-up questions. First, the question regards the current situation. You mentioned Italy and the sustainability of the government debt and whether there will be some troubles within the debt market of Italy and possibly also other Euro area countries. But my question is whether the banking system itself is endangered, because some of the countries within the Euro area and non-EU members are proposing some changes within the banking system. For example, in some kind of period of non-payment of mortgage credits. Yeah? In Italy, it is discussed. In Poland, the president is also discussing pushing such kind of bill forward, just to say to people, you do not need to pay installments on your mortgage credits for 1, 2, 3 months as a way to support them. How do you feel? Is the banking system right now endangered by the COVID situation?
Well, it's kind of hard to tell, and I'm very reluctant to make any predictions, since we economists don't have a good track record in predictions. So hence whether this ultimately will be purely a liquidity crisis and will be like a V-shaped economic shock with a quick deceleration, recession, but then also very quick recovery. In this case, I wouldn't be too worried, because then these are mainly liquidity problems and they can be overcome. However, if these are longer term problems and if there will be a longer term recession, then it might be just a trigger to a deeper crisis, including for the banking system. Now, talking directly about these measures that have been proposed, I think it makes perfectly sense to have payment holidays for people who are out of work, for example, right now, or for firms that are part of international supply chains and that simply cannot function right now because their workers are not there, they're sick, or they don't get the material from China or from somewhere else, or they cannot deliver what they produce to their upstream purchaser. And that makes sense. I mean, the question is, of course, and actually that's also where there's an advantage of many banking systems in Europe, where we have these relationship-based lending, where long-term relationships between borrowers and banks can actually be helped, can actually be useful in these kind of situations. Banks really helping their borrowers during these hard times. And there's evidence that they actually do this. There was evidence on this during the global financial crisis. Now, in terms of deeper problem for the banking system, I mean, I find it very useful what the SSM did yesterday, also the EBA announced in terms of capital forbearance. So allowing banks to basically eat into their conservation buffer and into their Pillar 2 capital, because, and including also indeed the liquidity coverage ratio. What I would not be comfortable with is these loan loss or loan classification forbearance. So I think it's important to stick with transparency and not make the situation opaque. So if banks give payment holidays, that's good, but they should then also clearly indicate what share of their loan portfolio, for example, is being affected by these payment holidays. So we want to not be opaque. We want to send clear signal what is going on. We don't want to create new skeletons in the closet, basically, that then fall out later on, either in the autumn or maybe next year. And I think so. I think that is important.
Okay, thank you for that insight. I promise you 2 questions, and the second question I would like to ask is a question that one of the journalists asked us via the Slido platform. He asked, how long is the current setup, common monetary policy and separate fiscal policy, sustainable, especially with the growing concerns about secular stagnation in Europe? So how long can it be that we have a common monetary policy with separate country-specific fiscal policies?
I mean, there's a lot. I mean, we have this kind of paradigm in I guess in modern macroeconomics of independence of the central bank or independence of the monetary policy authorities. However, we've also learned, I guess, from the global financial crisis that in crisis situation, in systemic distress situation, a coordination across different policy authorities is really necessary. And I think the one reason why the US came out so much more quickly after the global financial crisis is because there was a coordination going on between the fiscal and the monetary and the prudential supervisory authorities without compromising at that point, at least 12 years ago, the independence of the Federal Reserve Board. So I think that is definitely needed. I mean, of course, I could also turn it around, and I mean, kind of coming back to the blunder by Madame Lagarde yesterday about the spreads. I think there is more clearly the burden right now is on the fiscal policy authority. It is on the Eurozone group to address any fiscal fallout from this recession and a possible crisis. There is, yes, the ECB can go back to whatever it takes, but of course we also know that this is not really sustainable in the long run. You can cover up liquidity problems, but ultimately they will not only turn into solvency problems, they will also turn into more socio-political unrest. And so I think it's urgent, number one, coordination, but also a more responsibility from the fiscal policy authorities in the Eurozone.
Okay, thank you, Thorsten. Thank you for your insights. Thank you for joining us. And it was great to having you here. I know that you have another meeting, so you are free to go. Thank you. It was a great pleasure talking to you.
Okay, thank you. I'm just going to be another 15 minutes. I'm just going to follow the next presentation because I'm certainly very interested. Thank you very much. And apologies again for having to leave early.
Okay, thank you, Thorsten. So now the next presentation, as it was announced already by Thorsten, comes from Svend, Professor Svend Jensen, Copenhagen, School of Business. Could we switch to Svend and see him?
Can you see me?
I think yes, but on a small scale.
Can you hear me? I guess that's more important, that you can hear me.
Yeah, we hear you. We will have it in a moment. Great. Thank you for being with us.
Thank you for the invitation to be here. And pity it couldn't be in Warsaw, but good it can be done then through this device. And okay, so is it okay? Can I start speaking now?
Go on.
Okay. Let me just say a few words before I get into banking union, because thank you very much to Thorsten for putting up sort of the general framework about banking union and presenting us some of the wider issues, and then I hope I can address some of the more specific ones which might pertain to smaller countries such as Denmark and Sweden, and possibly also to Poland. But before getting into the specifics about banking union, let me just say that I represent a country here, Denmark, with 50 years or 48 years of membership of the European Union, right? And 40 years, rather 38 years, since 1982, we have adopted a fixed exchange rate, first against the Deutschmark, and since the Eurozone started, we have had a fixed exchange rate policy against the Euro. And I guess this is, if you look at the history of exchange rate regimes, this is an extremely long period with a well-functioning fixed exchange rate regime. It has been tested both from below and from above, if I may put it this way. In 1998, it was tested against sort of the pressure of a depreciation of the krone against, at that time, the Deutschmark. And more recently, in 2015-16, it was tested from above, if I may still put it this way, in the sense that it came under pressure for an appreciation. And after the Swiss National Bank decided not to peg against the euro any longer, there was this massive inflow of capital and a big pressure on the Danish krone for a revaluation. But nevertheless, in both instances, both back in 98 and just more recently, the Danish monetary authorities have managed to keep the exchange rate within a very narrow band, right? Effectively, a fixed exchange rate regime. I should say that Denmark has a deal with the ECB for a symmetric exchange rate regime. It's not sort of just up to the Danish central bank to keep the rate fixed. It's also, I mean, you can get assistance from the ECB in case it is needed. And we know that this would apply unless the policy of Denmark would threaten price stability in the Eurozone. But since this is very hard to envisage that such a small country should really threaten price stability in the wider Eurozone, I think it's fair to say that we will always rely on assistance in case the currency is under threat. Since this is also about Poland, I may actually, and also perhaps for a discussion later on, want to discuss, well, I would like to discuss with you guys sitting there about whether this is a likely scenario also for Poland to sort of adopt a more or less a permanent ERM2 policy, because I guess one way of labeling Denmark's policy is sort of not to consider ERM2 as a waiting room before joining a full-fledged membership of the Eurozone, but to, well, that's how it is perceived in sort of to be that it should be a waiting room before going into full membership. But for Denmark, also as Thorsten alluded to, it seems like it's a permanent arrangement for Denmark to run a fixed exchange rate regime, very, very close ties with the Eurozone, but not really joining. And I can't see that this is on the policy agenda in Denmark to join the Eurozone, but it is shared across a very broad political spectrum that fixed exchange rate against euro, this is our policy. And just to get back to whether this is also an option for Poland, I think it would be harder for Poland to get a deal with the ECB. You know, if you wanted to say something like, so ein Ding müssen wir auch haben, like Denmark, it would, for such a much bigger country like Poland, probably be a difficult deal to strike. But this is something which we probably could take on board in the subsequent discussion. Okay, so sort of to identify Denmark sort of in terms of its relation to the monetary union, that was my first task, and I would be extremely happy to take questions on this in case you're interested. Let me move on to the debate about about banking union. I have prepared some general remarks, but since they are already covered by Thorsten's presentation, let me single out two issues that I want to discuss. The first relates to decision making, in the sense that if Denmark, as a country which is full-fledged member of the European Union, but not a member of the Eurozone, if it wants to join banking union, well, there is a problem about decision making, since this takes place for the SSM within the ECB. So you would then be in a situation that key decisions about Danish banks would be delegated to an institution, to the ECB, in which Denmark has no representation. So this is obviously an issue which is an issue. From what I had just said, spent the first minutes about Denmark's role as a de facto member of the European Monetary Union. I mean, fixed exchange rates against that for 40 years. Doesn't that boil down to de facto membership? But still, again, without a saying in the ECB. So for Sweden, that might be a more difficult or more tricky issue of not having sort of a vote in the ECB. Denmark has shown, you know, for so many years that, well, we are happy to follow your policies, basically set our monetary policy on autopilot, do the same as you do in Frankfurt. We don't need to be present in the where the decisions are taken in the boardroom, but we do nevertheless what you decide. If this could be applied also to banking union, then there shouldn't really be an issue. But still, I think there is an issue to be discussed here, that decisions involving major Danish banks would be taken within a forum where we are not represented ourselves. So I think there is an issue on that side. Still, if I may just continue within decision making, I mean, Thorsten talked about the European Stability Mechanism, the ESM, as a potential backstop. But if this is decided, remains to be seen. I think it's very likely that the ESM may take this role in the future. Then there would be another issue for countries like Denmark, Sweden, and Poland, well, unless you join fully, but let's just take this perspective of being a member of the European Union, but not a member of the monetary union, then there is an issue of the backstop, which is a pure Eurozone institution. So if you join as, let's say, Denmark, the banking union, first, you don't have a saying in the decision-making council, and you may not then, if there is a need for getting funds to assist for a banking resolution, and these funds would come from the ESM, you don't have access to these funds, and the bill would be stuck with the Danish taxpayers. So you have sort of a joint, you have a cocktail here of no decision making, and you don't have access to the funds from the ESM. I mean, I'm just putting this up as what I would consider a realistic outcome and something perhaps for discussion. How much time do I have? Because I know Thorsten is just leaving. I have one other issue which I would like to mention before leaving, but Thorsten, are you still with us?
Yes, I am actually, and I have some want to comment on what you just said on the ESM. So yes.
Comments.
Why don't we take Thorsten in before, because then we can discuss the second issue I have. But yeah, okay.
Yes. Well, thank you. So I think that is actually a critical issue. To which extent the Denmark and Sweden would participate in the backstop arrangements, ESM, Single Resolution Fund, and of course, and then here comes, and I didn't mention this as detailed because I thought this discussion more generally on participation in the banking union also for future Euro members, which Denmark and Sweden, of course, are not. And I guess here comes the issue back on the legacy assets, right? I mean, there is, of course, reluctance not only in Netherlands or Germany, but of course, obviously also in Denmark or in Sweden, to have to pay for possible losses that have been occurred before Denmark and Sweden would join such a backstop mechanism. I think that's it's a political, an important political economy issue, I think, which I also think that this whole discussion we're having is not just a technical discussion for regulators or academics such as us, but it has to be also, there has to be broad political consensus to actually go ahead with that, because it does have certain implications in terms of fiscal policy. So I got earlier the question of interaction between fiscal or cooperation with fiscal and monetary policy, but of course you cannot really treat the completion of the banking union completely independent from fiscal policy implications. Thank you.
Mm-hmm. Was that your final remark, Thorsten? You're leaving us now, right?
I will be leaving now. Okay, well, thank you very much. It was great talking to you, and thanks also for your presentation. Bye.
Thank you. Thank you once again. Have a good day. Okay, you wanted to make one more comment, Svend?
If it's okay with you, because this is something...
on what topic? Maybe we can come back to that later. Please tell me your topic you would like to mention.
Well, the topic the topic I would like to address is something which is, to me, extremely important about banking union, about sort of the expertise which is contained within a supranational institution. And this is something which, to me, speaks so much in favor of joining, because what we have seen in smaller countries, I mean, you could go to Iceland, you could go to, well, also what I know most about, Denmark and Sweden. You know, it's difficult to avoid a high turnover rate in the national supervisory body.
Okay, that's a very important topic. We'll come back to that in a minute. I would like to give the voice to our panelists here in Warsaw. Is that fine with you?
It's fine with me.
Yeah, great, thank you. Sebastian.
Okay. As long as you promise that we get back to it. Okay. No.
I do promise.
No. Oh, hi, Sebastian. We have met before.
Hi, nice to see you.
Yeah, I would like to ask you about because we were in the north. Yeah, we were in Sweden, Denmark, but I would like to ask you about stands the viewpoint of V4 countries or all the CE countries here that are outside of the euro area? What's their approach to the European integration regarding currency union? Are they in favor? Are they willing to join the banking union but not the currency? Or what's the general stance right now?
Okay, let me start with a broader observation. That this issue discussed here today, and I think it's a good idea, it's actually quite niche thing in seminars about the Eurozone or the future of the European Union. So it's underestimated, you know, because these economies are maybe not so heavy for the entire picture of the EU economy, but also for other reasons like problems of the Eurozone with reforms and things like that. But I think we could mention at least two things that should a little bit scare us, although to say that, you know, maybe it's not a good thing facing the corona crisis. But we have this split in the monetary policy, also to some extent fiscal policy, but number one, in the exchange rate policy. And the first point, imagine such a crisis like the corona crisis becoming more dramatic. And my question is, at what point would you expect questions from, say, colleagues in France? What will happen with the currencies, with the exchange rates from Central and Eastern Europe? Will they devalue, which might endanger our position on the EU single market? Because the competition under these circumstances, you can hear that, for example, from French colleagues, is not fair, right? Because these countries have the opportunity to devalue their currency, and we have not this opportunity. So the single market under these circumstances is not fair. So politically, you can hear that argument. I hope not, but this is a political option we need to consider. And another option is that, the globalization becomes brusque a little bit, right? So you might, under some critical circumstances, expect that somebody from outside Europe will attack these currencies, simply to cause currency turmoil, instability, and to force, for example, the Eurozone to help these economies. But the process will be difficult because we don't have actually many institutional answers to this kind of challenge. But these two things might become real in the future.
But we see them here in the countries, the governments within the CE region see those problems you are mentioning?
I don't think so.
I don't think so as well.
No, this is non-existent. But to be fair, we should also mention that, well, this kind of scenario 2 years ago was absolutely abstract, right? Now it's becoming more real. But going back to Central and Eastern European countries, which are members of the European Union, but not members of the Eurozone. So talking about the V4 is not actually a good idea, because you have Slovakia, which is in the Eurozone. You have Poland, Hungary, Czech Republic from this group, but you have also Romania, Bulgaria, and Croatia. And to understand the position of these countries towards the Eurozone, you need a slightly broader perspective than just economic aspects. And so first of all, the first factor is a vision of the European integration, and also perception, what we are, what is our position in this process. So here you might distinguish between some countries which are quite peripheral and they think about a quick path to the core. The second thing is the economy, the state of the economy, and the idea how to catch up actually with the core of the European Union, how to make the economy stronger, more adapted to the challenges. And the third thing is pretty actually simple. It is the internal political economy. If the society is actually supportive towards joining the Eurozone, this is in a way to find in the position of the government, because you might, using the perspective of the euro, convince the society to more reforms, to more adaptation to the challenges of the current economic life. So, taking these three factors, I think we can see three strategies. The first one is a fast track to euro, and this strategy is
a fast track to euro.
To euro,
yeah.
To euro, yeah.
But the euro is a vehicle that allows a faster track to the city center where the policy decisions are made.
Yes.
Yeah, that's the case of Croatia, I think.
That's the case of Croatia. That's the case of Bulgaria, and that's the case of Romania. So these three countries declared that they would like to join the Eurozone as soon as possible. Although we don't see so much eagerness on the Eurozone side. So now the discussion is postponed to July, actually, the decision about Bulgaria. The second option is actually slowing down the process. And here, this option is represented by the Czech Republic and Poland, which for many reasons, first, perception of its position in Europe, also idea how to boost economy, remain more flexible because the euro is understood as a kind of constraint for own economic policy. And the third thing is that the support for the Eurozone perspective is very low in these countries. And the third option, we can call that a pit stop strategy. So we are waiting a bit, is Hungary. It's Hungary, which has a society which is pretty enthusiastic about the Eurozone perspective. You have political elites which are actually quite open for this perspective, and I think this country is simply waiting for a right moment to join the Eurozone. When, for example, the political situation will be difficult for Mr. Orban, for some reasons, rule of law whatsoever, the discussion might be completely changed by the perspective of a quick joining the Eurozone.
So quite conformist.
Excuse me, is it possible to have a question here? Or what?
Yeah, sure,
yeah,
go
sure.
on.
Yeah.
Okay, it's just for me to fully understand the classification made by Sebastian here. You know, if we take the as soon as possible approach, this is like Croatia, Bulgaria, and the wait and see, that is for Hungary. How did you characterize the Czech Republic and Poland? If this is that somewhere between?
This is what I call slow down the preparation to the Eurozone. So actually freezing the preparation.
What is the difference between wait and see and slow down the process towards? What is essentially the difference between, on the one hand, the Czech Republic and Poland, and Hungary on the other? What is the core difference, which I can remember after this discussion?
Okay, I think that there are two major differences. First of all, this is the society, which is very skeptical towards the Eurozone in both Poland and Czech Republic. And to change this opinion, you need years, I think. Years of campaign, years of, political discussion, convincing the society about advantages of joining the Eurozone, which is difficult, we know that. After 10 years of economic growth in Poland and in Czech Republic, after reaching very low level of unemployment in both countries, because Czech Republic is number one, I think Poland is now number two, right? Together with Germany.
The lowest.
So how the question is, how could you actually design a convincing narratives, political narratives in these countries for the Eurozone, when simultaneously you see many countries in the Eurozone facing economic problems? So this is difficult. And the second issue that, in my opinion, makes Poland and Czech Republic in a perspective of at least 10 years outside the Eurozone is a kind of political economic strategy. For example, the Polish government represents the opinion that we are a kind of dependent market economy, right? So we need to change the economic structure. We need to reach a certain level of convergence with the core of the Eurozone for the decision to join. I think this will take at least 10 years. So it's not only,
But Sebastian, how about the countries in the Balkan? I mean, and Romania, Bulgaria. I mean, I think Poland is more advanced than these countries, right? Is that?
I would like to bring Maciej Witucki to the discussion to tell us a little bit about the Polish perspective. To tell us a little bit about the Polish perspective. Why don't we have the euro in Poland right now, and will we have? Or do you agree with Sebastian?
Yeah. So maybe just an answer to your question, that you have a tangible example of the deceleration policy. Roughly a year ago, Polish central bank closed the department in charge of introduction of euro in Poland, which was created at the accession to the European Union. So this is a tangible, visible element of we definitely slow down. We even closed people who are supposed to study and somehow inform the population about the accession to the Eurozone. So those are very, very physical elements. Will we have euro in Poland? I fully agree that not within the next, I would say 6 years, maybe not 10, but 6 years for sure. The reasons are obviously are very much, I would say, political. Mm-hmm. It's a political vision of, it's not even a wait and see policy. It's effectively a very reserved policy towards the entire European project, and, mm-hmm. and Europe being a kind of a specific, very visible element of this project. How come you can expect that if you don't really believe in the union? How come you take the tangible, visible element of it being euro? So no, I don't believe that we'll reach it. I fully agree. Well, personally, because the organization is not having an official position, but personally, I definitely agree with what Thorsten presented. Mm-hmm. There are a lot of cons of not being in
the banking union and Eurozone.
So not sitting at the table. That's the most important one. If you want to be within the table, if we want to discuss about the future of Europe, we should be at the table. But there is a bit, one, if I may, one a bit wider than the subject of this conference, which is the European project will not happen without, I would take a risk of saying, federal regulations in business or for business. Mm-hmm. There will be no European AI if we apply different regulations between Poland, Germany, and France, because even an AI fed with 80 million Germans will be always weaker than the one with 300 million Americans or a billion of Chinese. Same stuff, there will be no Industry 4.0 in Europe without federal regulations or how the Polish supplier should communicate with the French plant and with a German engineer on new products. And same element, if we don't have, well, not necessarily today, there are always excuses. Now we have Corona. But if we don't lose this, I would say, national independency on the banking policy, supervision, mm-hmm. the strong Europe will not exist. And if the strong Europe does not exist, I can take a risk of saying Europe will not exist, in a sense, in the political terms. So personally, I really believe that it's a mix of the economical project and the political project. But the final destiny of this project is to create a strong continent, I would say, economically as well. It's not a pure philosophical project of Adenauer and Schumacher from 6 years ago. Yeah. Today it's more about how to compete with the other continents, being America, being China. And I really believe that the only option from business perspective, it's quite fun, not political, from business perspective, it's to be economically united. And Euro and the banking union and the European regulations are the tools to help us to try to win the war. I'm not saying that we will win it necessarily, but at least to try to win it. For the competition, not the war. Let's be
So what needs to happen? So what has to happen if Poland would eventually join the euro area? So of course we need to change the government.
Yes.
No, but from a economic institutional perspective, does it require a solvency within the euro area? So the euro area institutions should change, or the Polish society should change? Should we be more convergent to the highest wealth countries within the euro area? What are the prerequisites for Poland to join the euro area?
So if I may very quick, I think it's first the mechanism do exist. Secondly, Europe has to work out, or the Eurozone has to work out on its credibility, because effectively, even within the Eurozone, and the Greek example, now Italy with Corona may be another example of how much you can destabilize the systems. So the trust in Eurozone is undermined by those events. So there's some things to be done, or many things to be done on the Euro side. On the Polish side, it's quite funny. I don't really believe that the question of perception is so important. There have been studies like 2 years ago where 60% of Polish entrepreneurs have been favorable towards the Eurozone. Poland integrated Eurozone.
Right.
So this question, obviously, you have a popular perception, but popular perception, with all respect, somehow you drive it. You drive it if there is a willingness. You can drive it both ways. 5 years ago, 75% of Poles have been positive to admission of some migrants. 2 years later, 75% of Poles have been dramatically against arrival of any migrants to Poland. So that's why we need this department, the Central Bank of Poland, to be recreated. But I really believe that the tangible business and regulatory arguments are more important than this kind of popular opinion, because popular opinion you work it out.
One question from Svend in his presentation. He asked whether Poland could join permanently the exchange rate mechanism too. So we have a fixed exchange rate, but being outside of the euro isn't an option.
For the reasons we have been presented today, as this is a fundamental element of the economical doctrine of the government, that we have to have this floating zloty as the defense mode. In the defense mode, I don't really believe that we'll touch it in the incoming 4 years.
But I think maybe we should consider
Sebastian.
an option that the ERM2 is not just a kind of kindergarten for the Eurozone, but maybe a political tool to stabilize the Eurozone relationship with the non-Eurozone countries. Because we are facing the following perspective. The enlargement of the Eurozone will take much more time than it was expected when the Eurozone was created. So at that time, it was simply an expectation that, okay, two years after joining the ERM2, things will be fine. Everybody will join. But this now is a kind of long-term design. And at the beginning, I mentioned two threats following from this suboptimal situation for the single market and potential speculative attacks against currencies of Central and Eastern Europe from outside, right? So this kind of politicized ERM tool could be a kind of solution. So we make a commitment that we won't devalue our currency in a disruptive and very deep way, right? And on the other hand, the Eurozone countries accept that we have or we should have a say in the process of Eurozone reforms, because in the long term, we should belong to that, right? So this could help to smooth a little bit the whole process.
I fully agree. It's a kind of political deal of we have a seat at the table in exchange of keeping our exchange rates reasonable, but those are the two conditions from the Eurozone because I really believe that there are reforms to be done on the other side. So the fact that the Polish government is not willing to jump into euro, there is some rationale behind. So one, a plan for the reforms, and then a seat at the table of the people reforming the system in exchange of our accession to the mechanism. Yeah.
Is the banking union one of the reforms that are desired, or is it something that doesn't matter for Poland and Czech Republic?
No, I think also this comes from the observation how the process of negotiations between the Eurozone, European Commission and European Central Bank and Bulgaria followed, that it's really difficult to think about joining to the banking union without being a member of the ERM2 mechanism, right? So maybe there is simply kind of concern that, this two systems a little bit too far on the macroeconomic level. I'm talking here about exchange rate policy and such a deep integration in the banking union. This is simply too much. We need to get closer on the macroeconomic level.
Okay, Svend, I promise you to come back to your issue about the supranational institution that got expertise within the European Union. Could you evaluate on that?
I definitely could, but let me first say that I find this discussion you just had extremely interesting. You know, especially, may I just say just a few words? Or how long time?
Go on.
Okay. Because I think it was Sebastian who sort of envisaged the prospect of a longer EIM2, I mean, sort of a commitment to fixity of the exchange rate, combined with, which wasn't completely clear to me, but combined with some kind of influence on how the Eurozone is developing, reforms within the Eurozone. Was that a correct understanding, Sebastian, that you made the point of sort of a longer period with a fixed Denmark-like exchange rate policy against the euro, yet with some influence within the Eurozone? Is that correctly understood?
Yeah, so it's like, you know, having the Danish model actually.
Yes.
Poland, but with more political influence on what is going on in the Eurozone. So I think it's a step forward in comparison to the current position of Denmark in the whole system.
But this is very interesting. The thing which I think is important to discuss here, you know, is to have the conditions right for running a fixed exchange rate. And one of the perhaps the most important condition is that your economy is healthy, that you have the you know, the structural reforms, the ability and willingness to reform, that you have, well, like the Nordic countries, also Sweden and Finland and Norway, demonstrated ability to take steps, you know, in case major shocks hit. I mean, now we have Corona, but it could also, in the case of Finland, be, you know, in 91, 92, after the collapse of the Soviet Union. You know, it took some time, but then you are back on track. So I think ability and willingness to reform and have a strong, healthy economy, sort of in real terms, that's a prerequisite for having a fixed exchange rate. It's not enough. As I tried to say in my opening remarks, in 1998, there was a crisis, right, in Russia, in some Asian countries. I think it was in Asia and Russia, where international investors reallocated their portfolios with greater weight on major currencies, and this put pressure on the Danish currency at that time, even though the Danish economy was very strong. And in that case, I think if you could strike a deal, sort of a partnership model with the ECB, where the Polish monetary authority isn't alone about keeping the rate fixed, but that you can also rely on assistance from the ECB. I guess this is where you are now, since you are an EIM2 country. But I think that's extremely important also for a much bigger country than Denmark, as Poland is, to have this commitment by the ECB to step in, you know, in case there's in case you have problems. So that is that's one thing. Let me now turn to what I said in my opening, that I would like also to mention about why I think for smaller countries in the European Union, but outside of the Eurozone, why joining banking union would be important. And the point I want to make here is that you have built so much expertise in the ECB to supervise. And supervision is in modern economies extremely important. Extremely important. And for smaller countries, it is hard to provide enough financial incentive for very talented junior economists and what else is needed to work in these authorities, and what we see is often, as I mentioned, high turnover rates. That when it is demonstrated that you are very talented working for a national authority, then you would easily be picked by the private sector and leave the supervision in a small country, the supervisory authority, authority, and there I think there is a special role for the supranational authority, that you can provide a very good competent staff, can provide career opportunities, and it is regarded as a prestigious place to work. So for small countries, this is my message really, for small countries, members of the European Union, but not in the Eurozone, including my own country, I think this is a separate, very important reason why to join banking union.
Okay, thank you for that.
That's basically my point.
That leads me to another question. Maybe there should be an institution, European Union institution, for opt-out countries to provide analytical insights to judge whether these countries are already at a level that allows joining to Eurozone, or as in the case of Denmark or Sweden, provide some analytical expertise for those countries. What do you think, Sebastian?
I think this could work only as a kind of cooperation, deepened cooperation within the European Union. This kind of idea. I think without United Kingdom now on board, it's extremely difficult.
We did not mention that until now, because the Brexit.
United Kingdom actually stabilized very much this division between Eurozone and non-Eurozone, and in this situation, we could actually think in a more flexible way about the future of the whole design. Now, the non-Euro countries, this is a rather small group, without economic weight enough in the whole European Union to enforce such institutions on the common level. So they have actually a very clear option. Join the Eurozone
and be part of all the benefits.
Yes, exactly. Or try to survive outside of it with the threats I mentioned at the very beginning. So I think we need to put more flexibility in this whole construction, simply to build up this level between non-Euro and Euro in terms of simply convincing our societies, that being closer to the Eurozone is a good idea. And this kind of structured, politicized ERM2 could be a solution.
Maciej,
are you moving on to the next session now?
Yeah, in a couple of minutes. We are just finishing. Yeah, a couple of minutes and we are finished. Okay. I wanted to still ask that question to Maciej, whether maybe there is a good way to form a kind of, V4, so Visegrad 4 group of countries for Euro house. So those countries that are not using the Euro, and reunite and integrate.
Yeah, I'm not a big fan of creating a specific commission for Euro propaganda in Brussels, because it will add buildings and civil servants there. So this is number one. So I don't really believe that. The Euro must become, the Eurozone has to become more sexy. In a sense of, we know there are troubles, so for the time being, the members of the club are trying to deal with. They dealt with Greece to some extent. Now there will be most probably Italy, weakened by the corona, will come back on the stage. So there is a job to be done on the European side, but I don't believe that we need a commissioner for Euro propaganda specifically for this purpose. And on our side, as it has been said, we have so many different approaches between the very pragmatic Hungary, I would say a very religious Poland on those subjects. So just an example. Yeah. So how come we would like to have them sitting together and discussing together about the common solution? It has to be solved at the national level. Okay. So the improvement on the euro is a job for the Eurozone. And on our side, we have to take a bet. Mm-hmm. And again, this bet is about, can you survive in the world which is globalized on one hand, but on the other hand, which is more and more brutal on the discussion level. So the weak countries, they will be more and more threatened by the big guys playing between themselves. It's a dangerous bet to say that you can survive with your foreign or your Polish zloty in such a difficult time.
I have to ask this quick question. Now in times of the coronavirus, a lot of experts is proposing that we should shorten value-added chains. So to process production. So we shouldn't be reliable on parts that are produced in China and so on. So the value chain is so long. We should shorten it and a little bit take a step back in the globalization process. Do you think that's maybe an option in that discussion?
No, it will happen. So there will have no more for product placement. That no more. We'll have no more a situation where all the iPhones are being produced in the same Foxconn installation in China. That's by definition. Trump was fighting for it for the last 4 years. Corona did it in 2 months, basically. But I don't want to push the conspiracy theories. But on the other hand, I would not be so naive to think that as the Foxconn has to move from China to Europe, for instance, you will suddenly have Poland playing with Polish zloty independent from Europe. That was the background of the question. And then winning the location of the plant. It's too visible, it's too big. So yes, it will change, but at the same time, the pressure from the rest of the EU or even the Eurozone countries is very big. So it not be allowed this kind of games where suddenly would like to become a Shenzhen of the West. I don't believe that the simple game of Polish zlotys against euro would be an argument to the winning argument for Poland and the crown argument of not joining Eurozone.
Okay, thank you. One last quick question then to Sebastian about approach of Germany, of friends right now regarding the opt-outs or countries that are not within the euro area. Do they want us still?
Exactly. Good question, because we are talking about our perspective, right? So we don't want to join. They, of course, invite us, and we should join as quickly as possible. It's our decision. But the situation in the Eurozone is much more complicated. France is now still thinking about Europe of different speeds. Because it will make possible to turn the Eurozone into a kind of political union with own Minister of Finance, with own budget, with the European Monetary Fund, and more of this kind of institutions, and added to that, European Social Union. This is also the French tradition of dirigism, of interventionism.
But by social union, you mean on the fiscal side or social institutions?
Social institutions,
consumer protection and so on.
Yeah, and we, with our economic models, we do not fit actually into this picture because our competitiveness is based on low cost and flexibility. We are fighting on the single market using prices, low prices. Yeah, so here you can see a very clear conflict and tensions. Yeah, Germany is actually on our side because Germany is trying to think about the European Union still as a one single market and will try to protect this construction. So this is why this might explain actually why Germany is slowing down France in all these ambitions of reforming the Eurozone. So Germany is definitely on our side, even if it's not really enthusiastic about quick membership of countries like Bulgaria in the banking union, because it does mean, for example, problems when we introduce the deposit insurance scheme. Yeah, so there might be a threat of more transfers from Germany to countries facing some problems with their banks.
Okay, our time is up. Thank you a lot. Thank you here in Warsaw, Sebastian, Płóciennik, Maciej, Witucki, and great thanks to you, Svend, Jensen.
It was a pleasure.
Thank you.
So,
And I think this, if I may just end by saying that this very interesting discussion just paved the way for a new conference to, when Corona has gone, to follow up on these issues. So I hope to see you again on another time, even physically.
Having you here, I hope to see you in person in the future, and we'll for sure make the discussion going on. I wish you good health to every one of you here in the room and to our listeners. Thank you for this panel. Now we'll turn to a video from Professor Danuta Hübner, who is the member of the European Parliament and recorded for us a short speech. Thank you.
Thank you.
Naprawdę przerwę. W tym czasie jestem 60 maili w temacie koronawirusa.